Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods, and today we're talking about people's comfort level and how comfortable they are paying a huge amount of money to mortgage interest. Well, welcome back for another episode. My name is Levi Woods. This is Drawbridge Finance. And as always, I'm not a financial advisor. I don't work in the finance industry, and this is an opinion channel about money. And this is a channel that's built around helping people grow wealth. And there's kind of an ongoing amount of topics that I cover. So I often talk about option trading and dividend investing. And lately we've been talking a ton about mortgages. And on one of my mortgage videos, somebody commented the other day and said, is anyone really comfortable spending $164,000 in mortgage interest? And I thought this was a really interesting question because at first I didn't quite get it. I was like, well, what do you mean feel comfortable with paying mortgage interest? I mean, it's kind of a reality for most people. Most people that I know anyways weren't born into money. They don't have just, hundreds of thousands of dollars sitting around that they can just plunk down on a house. So most people have to work, and in order to be able to afford a home, they have to have some sort of payment plan. And with that payment plan comes mortgage interest. That's just kind of a reality for most people. So it really got me thinking because the question was about how much does your house value have to increase to cover the interest expense? And I don't think that it's relevant at all, personally. I mean, I own a home. This is my home, and I own in a very, very expensive city. And we'll look at some of those numbers today. But for the most part, I don't think that people are buying homes as an investment, and they're not buying them because they're trying to avoid interest payments. Most people buy homes because they need a place to live. So when I need a place to live, I have a choice. I can either rent a place or I can buy a place. So I started today's video and I thought, well, what it really boils down to is the interest that you're getting charged on your mortgage outweigh the cost of potentially renting the same place, because that's where there could be a differential. Because if you're spending way more on interest than it would cost to rent, then maybe that's not a very good scenario. So I started to look up some data, and I'll show you guys what I looked at. One of the things I looked at was the cost of living in the United States. This is a Numbeo, and it basically says the cost of living is 6.16% higher than in Canada. Rent in the United States is 34% higher than in Canada. And it's an interesting statistic, that it's 34% higher than in Canada, because when I started to look at the numbers, it didn't feel like that at all. Let's scroll down here a little bit and let's look at like buying an apartment per square foot. According to this site, it's $241 a square foot. So what that equates to is if I wanted to buy an apartment that was, say, 1,000 square feet, I'd be paying approximately $241,000 for that. I would assume that by this, I could rent an apartment in a city center for around $1,200 a month. Now, looking at those quick numbers, on a 30-year mortgage, a $240,000 place, the mortgage payments would be less than $1,288. So of course, I brought up an amortization chart, and I thought, well, let's just take a look at this. Like, what if I put in $241,000? Now, of course, you guys can download these charts if you want to play around with them. They're on my Etsy store, or if you want to become a patron of mine and follow all of my trades, you're more than welcome to sign up. You can download these for free if you're a patron. I think it's like the $7 a month tier that allows you to do that. And then you can play around with these. Or if you just want to purchase them one-off, they're a couple of dollars on my Etsy store. Anyways, taking a look at this, a loan amount of $241,000, an interest rate of 4.35%. And again, I pulled this off. The mortgage interest rate in percentages yearly for a 20-year fixed rate mortgage, 4.35%. So I'm just pulling the data straight off of this website on a 360 month. So the payment would be around $1,199 or $1,200 a month. Now, according to this, an apartment is $1,288. So in this case, the rent is actually higher than the mortgage. So I don't understand why somebody would rent if they could get a mortgage for cheaper. So it started to kind of kibosh my whole plan, because then I was like, well, I need to look at other places. So I started to look at Zillow. Well, similar sort of thing. Like here's Zillow Home Value Index is saying $229,000 for a home. in the United States, and that, you know, the value of homes has been going up over the last couple of years, and the market health has been going down, I guess. And then here, listings and sales. So a median price, $155, and this is price per square foot. And then a rental, they're saying that the rentals are $15.69. So this is another website that, you know, like if I look at a 2-bedroom, $14.57. So they're saying that right now, the price to rent a place is actually more than the cost of a mortgage. Now the mortgage, some of that money just goes into the ether. It goes to the banks, and that's the interest portion. But it's not even the whole payment. So I was going to compare how much went to interest and how much would compare rent-wise. And all of a sudden, this just didn't even make sense. Like I started to build this sheet, and I was like, okay, so Alice and Bob, if they have $15,000, Alice gets a mortgage, Bob rents, they rent a 1,000 square foot place. The price per square foot was $155 for Alice to buy, and Bob's going to rent for $1.18. The monthly cost was so similar, and I just like, so this math isn't working. Now, of course, I live in a ridiculous city. I live in Vancouver. So let's take a look right here. Vancouver real estate trends. This is September 2019. Vancouver house prices, the average sold 1.1 million. Like, this is ridiculous where I live. You know, a 4-bedroom home, $2.2 million. 3 months ago, $2 million. Like, this is ridiculous how expensive these are. Similar places close by, still ridiculously expensive. Richmond, $890,000. Coquitlam, $800,000. So the massive amount of home value here, which means that the rents are high as well. So then I started to think, well, let's see, because in my life, I've always been in a situation where mortgages were more expensive than rent. It was cheaper to rent than it was to get a mortgage. So it's hard for people to make that leap, because when they buy a house, all of a sudden they have to up the level of payment that they're making every single month. So I took a look. Well, here's a 3-bedroom. Now this is the upstairs only in a house in an area not far from me. And I'm sure that this house, if it was selling, it's a tear down. It's available for just a couple of months, and then they're going to tear it down and build something new. And this property is probably worth that $1.2, $1.3, or $1.4 million just as a complete teardown. But check this out. You rent it for $2,500 for the upstairs only. And then the downstairs is going to rent for similar. So they're probably making around $4,900 in rent. And the mortgage, to get a mortgage on a place like this, is going to be like $5,800 a month. So that's the reality that I live in, is that the mortgage payments per month would be much higher than rent payments. So today, what I really want to do is I want to break these numbers down, but I need a little bit of information. So can you guys help me out? Are you able to like give me some information? What I need is what the length of a term of mortgage would be that you would consider, what that rate would be. So like a 30-year on a 4.5 or a 4.2, something like that. Then, so I can figure out what the monthly cost of buying a home would be. Then I want to know how much a home value is in your city, and how much it would cost to rent that home on a monthly basis, so I can get some figures. So if you guys leave a comment below and tell me those things, so it's going to be probably everybody's just put down a 30-year. We'll just base it off a 30-year. What percentage can you get a loan for? How much is the value of the home? And how much would it cost to rent that home? And then I'll be able to like use some actual data from different actual subscribers, and we can like analyze this a little bit more, so I can make a more complete video next week. Anyways, thanks so much for watching, and let's get rich together.